Hello, everybody, and this is episode number 2. I'm going to go ahead and cover 3 main topics today. First topic is usually always going to be something in regards to the market. Then I have some home theater information as far as movies coming out digitally and working from home. So first thing that I want to go into is an interesting post that I saw as far as the S&P 500 versus previous crashes. And one of the interesting things that this provides as far as a visualization goes is the speed and velocity that the move that we're in currently has. So obviously the best comparison is 1987, and everything that happened during that period. I wasn't a market participant, but I'm sure it was some crazy stuff that was going on. And in all honesty, I don't think that the move that we've had really has the gravity of the situation as far as the economic disaster priced in yet. It's some really eye-opening information. So if you take all these moves and you just extrapolate out and squeeze them, so if I could take this 29% move and I could pull it and drag it as far as the distance and the duration of days, a lot of this move looks like a lot of these moves. It's all just squeezed together because the time that we're in, information is faster. There's more trading. There's a lot more ease to getting access to your accounts and trading them. That one of the things that I see is I know that in 1987 it pretty much went a little bit lower and then it bounced and ground all the way back higher. So hopefully that's what happens. But according to how I view this chart, is that first big move necessarily wasn't as bad, but it looks to me more like that first initial move. So, 1987, a lot of different issues that were going on, but extrapolating out the chart and seeing, how things react to that is more of an eye-opening thing. And the best one to look at to me was the 1929 move. So if I could take this red line and I could squeeze it all the way down and out to this low trough here, I would hope that this bottom is this bottom right here, but I really don't think that it is. I think this bottom is more right here on this chart, and next week is going to be probably even crazier than the previous weeks. Case numbers are exploding, especially in New York, where I think we're already at, last time I looked this morning was over 10,000. I think there was maybe 1-2 weeks ago. So it's market-wise, it's going to be very interesting to see what happens next week. It's going to be very interesting to see how market participants react to news. I foresee that if the news starts getting bad, but the market doesn't really react or care, that's when you start seeing things a lot more priced in. So if you start seeing, heaven forbid, high death numbers, it's going to be more of a, how do you predict earnings? Those type of things is going to matter. So I think it's very possible that if you pull this chart out, this move right here was this move, and this downward move is right here. So it's very possible that next week we could just have a full on, straight down move. I hope not, but the way we closed on Friday does not give me any confidence that that is the fact. So just kind of be aware of that as far as markets go. One of the things that I wanted to pull up was the monthly on the SPY, just to give you an idea of how fast this move was. So it really didn't start, I don't think it was like February, it was mid-February, but we were obviously at all-time highs, like February 19th, I think it was. And this is how fast we've given that entire move back all the way to 2017, almost 2016 on some of these other names, as far as the small caps go. They're below, levels. They're at levels, seen in 2013, which is astonishing to me. But the main one that I care about is the SPY. As far as, just technicals and charts and how fast this has happened, ideally it's a snapback move. I don't think that we're in for that. It seems like everybody still wants to buy this big dip. Even people that I talk to that have never traded markets are like, when should I buy? And questions like that to me are like, whoa. I told one of them, just wait. Be way more patient than you think that being a buyer right here is. Because honestly, what would be a better idea is be a buyer here and then watch it go straight down to like 160s. And then to go, what do I do? or wait 3 months, see where this trough might actually happen, and then be a buyer. And I think it's going to turn more back way into a stock picker's market. I think the days of just blindly buying an ETF are hopefully over, because to me that's reckless investing. Yeah, it's great as far as fees and all that go, but I never really got on board with that idea as far as just buying an ETF. It gives you great exposure, but I'm more of the person who's always been like, I would rather be concentrated into companies that I like. If I like Nike, if I like Starbucks, if I like American Express, if I like JP Morgan, those are the names that, I want to just own. This is the first time since I've pretty much got into trading, which was 2010. Was pretty much broke back then, but it happened right in the middle of February where I just started getting really interested in as far as just owning stuff in an account where I don't see the balance. I just see money going in and the buying power for that. And then it has to pay a dividend. I think we're going to see a lot of companies be slashing those dividends now. So it's really more important now than ever that if you're going to be an investor versus a trader in this market, be patient and pick names that you like and pick names that are at a discount. And don't try to necessarily pick the bottom. But as you can see from the velocity of the move, it's very likely and very possible that we see like 160s, maybe 170s would be preferable, but who knows where the bottom is. I think next week is going to prove to be a very, very bad news weekend. Case numbers are just going to exponentially increase across the country. Whether that be because of testing, hopefully the death rate goes down. That's something that I'm really hoping happens, but who knows? So that's my thoughts on the market and where I think everything's going and the attitude that I'm taking towards this. Because everybody wanted to buy this first dip, and it was the first time I've seen a lot of people, even on YouTube, Instagram, Twitter, and all that, just be like, "Oh, I want to buy this dip. It's a big dip," and a lot of stuff's dropped 40% even from there. So just kind of use your head, go for the names that you like. The next subject is working from home. So those that are fortunate enough to not be laid off from their current job are working from home. So to me, this is kind of an interesting thing as far as why are these people even working from a building if they could just do their job from home? Obviously, I know there's some things that are like security, IT, you have to be there. But some of these other positions that, I can't even really think of at the second. What's going to happen in 3 months when these people have been working from home for 3 months? I think there'll be some backlash of saying, well, why do I need to go into work anymore? I've been working from home for 3 months and I've been doing my job just fine. So I think you might see a big landscape change as far as people working from home because, it's just more convenient. You don't got to get in your car. Sometimes you don't even got to get dressed. And I think as traders, if that's what you're listening to me from, we all know that. I mean, I still get dressed, but, my work clothes are sweatpants and a t-shirt. I love not having to go into an office anymore wearing a shirt and a tie and all that nonsense. And I think a lot of people do. Yes, there is professionalism and all of that, and that's something I totally understand. But, if your job is something that you can be on, Skype or Zoom video or anything like that, I think you're going to see some backlash in 3 months if people have to start driving back to work all the time. Because it's just way more convenient to work from home if you're able to do it. So, and on that note, Zoom video is very interesting. I actually was on it for about 2.5 hours today, and it's a pretty interesting little product. It's something that I could see as far as in this current situation, a lot more people using. 2 hours might be a little bit too long, but it's a fun thing to kind of play around with and chat with your friends because of the situation that we're in. So, just going to be one of those things that I'm very curious. If you guys have thoughts on, working from home, or like if you have a job where you're now working from home, let me know. I'm actually very curious to see what you guys have to say about that. So next thing, which I've expected and I've hoped for years, probably at least 5-6 years, is digital movie releases that were supposed to be in theaters. So I think the movie theater industry, they have a grip right now as far as licensing goes, because everybody still wants to go to the movies because it's a fun thing to see on that big giant screen and have that sound. But for the most part, if you got something like that at home, why do you want to have to go and like, you know, I've been to the movies maybe once, and it was to see the last Star Wars episode, and then other than that, I haven't been to the movies in almost 2 years. There's no real reason for me to go to the movies anymore. Number one, I think we're inundated with, Netflix, Hulu, all these different mediums from which we're getting entertainment that, we were at the point where, what do I pick to watch, and that's a really interesting thing, as far as from the 90s go, like everybody watched the World Series. So everybody talked about the World Series, It's a really kind of interesting change as far as, do I like this subset of category? Do I like thrillers? Do I like, war movies, all that? Everybody's got so much stuff to watch that unless there's a big name movie, it's like something like Star Wars that goes out into theaters, not a lot of people are going to the movies. And all you have to do is look at AMC's stock chart to know that's a fact. So I think AMC is going to probably be filing bankruptcy. That's my prediction. That's my guess. Don't trade on that information because I'm not your financial advisor, but that's something I predict. I own shares, but I bought it once and that's about it. I'm just going to let them do their thing and they're probably going to go to zero. But I think this is a really interesting topic. I'm curious what you guys think as well, as far as how well do the home premieres go. Like Onward was supposed to be a movie released in theaters only, but now it's already available to rent on Google Play for $20, and you can watch it in your quarantined home. So it's a very interesting thing, and I think that this trend might continue. I think if everything gets back to normal, this might still be a normal thing, but that cost might be a little bit more. It might be $30, because if 10 people are watching it in the house, they only make $30, whereas 10 people go to the movies, they're going to make $200, maybe more, the way that movies are priced these days. So that's an interesting topic. Last thing, and I'm going to probably do this for every single one of these, is I'm going to ask you guys for a topic to talk about. I can come up with as many as I want, but I'm always curious to see where you guys are at as far as thought process and what you want to hear and all that stuff. So next one was the first one, as far as like family, friends, and all that stuff, as far as their habits, tendencies go. I think you're going to see a big change if this lasts more than 2 to 3 months, as far as the economic fallout goes. People are going to be handling their money a lot different. Hopefully people start saving their money too. Even if you're somebody who can only afford $5 a week or $5 a month, save it. Put it somewhere in a savings account that you don't touch, just in case something happens. More likely than not, that might be something like car trouble or something like that. But always have some money that you just don't touch, in case of it's an actual massive emergency. And hopefully you don't go to like the hospital, because then you're just screwed anyways. Because let's face it. If somebody's getting charged $37,000 for a coronavirus test without insurance, we have a lot more problems as far as the society goes, in my humble opinion. So, food and restaurants are going to be hit, I think, massively. I think you'll see, sadly, a lot of restaurants, again, if this is 2 to 3 months, might snap back, but this is going to be a shock to everybody as far as, oh my God, we were at all-time highs. Everything was great. And that was a month ago. A month. And now you have the potential for 3 to 4 to 5 million people unemployed in the span of 30 days. It's unprecedented. And we don't know what it's going to do. But I think you just have to look back at history and see what went away first. I think food and spending 700%, 1,000% markup on a dinner is going to go away fast. I think you're going to see people probably learn how to cook. I think Blue Apron stock chart is a great example of that. Yeah, you're getting food from somebody else and you're being taught how to cook it. Granted, it's a monster short squeeze, but that's the mentality of what people are going to do. They're going to have to go to the store and learn how to cook if this is longer than 3 months. So it's going to be an interesting thing. Hopefully it's not the end of the world type stuff, which you can think that or not, but it's gonna be something. And I'm honestly, worried for some people that are out there, especially the 70% that work paycheck to paycheck and now don't have a job. what do those people do if their business that they work for goes bankrupt? It's a very interesting question to ask, and I guess we're just going to see what happens. So the last thing I am going to do is usually always going to be either book, movie, or entertainment related on this podcast. And the last thing I'll recommend as far as something to watch, if you're able to, I mean, most of us are in our house, so we're able to. I don't know if it's on Netflix anymore, but I think it's rentable, is The Trigger Effect. So it's a really interesting movie from the 90s, a little slow to start in the first 5 to 10 minutes, but it gives you a really interesting idea of just how fragile society is. And just the possibilities of what happens when we have that one simple thing of, electrical power. And when that goes out, what does society do? I'm not going to give away the movie, but it's a great movie if you're stuck in your house. It's only an hour and a half. It's something great to watch. So I highly recommend it. It kind of opens your eyes as far as what do people do in situations where they don't understand what to do. And they're thrown into the mix of a new world, a new lifestyle. So I hope you guys enjoyed this podcast. I will be back next week, either Friday or Saturday. It's usually when I have time to do these. So I appreciate it, and thank you for listening.